Well, Anglo American's chief executive warned of further difficulties next year as he tries to turn around the underperforming mining group. Anglo American's shares have lost half the value of their shares at the end of 2006, while over the same period Rio Tinto shares climbed 42% and BHP Billiton shares nearly doubled. To further analyze Anglo American, we've got Cobus Nell, mining analyst at Stanlib. I know that you ran into the studio because you've just finished the conference call, so it's hot off the press, so to speak. That's the term that we like to use in studio. Cobus, where are we going with this one? And is Mark Kutafani the man to back on turning Anglo American around?
Look, I guess it's back to basics, as he mentioned, no rocket science here to start off. Certainly, I think you got an impression that there was a lot more focus in terms of how they see their assets, better understanding their assets, in terms of really putting in more skills, how to do things better. Mine design has sort of come in many times in terms of pit, how to mine the pit differently, how to optimize the fleet. And it's all basics, as he says, and again, you just wonder sometimes. I mean, we've heard the figures before, or just as he came into step into the hot seat, how poor Anglo American has actually been performing from operational perspective, So as he says, there's a lot of low-hanging fruits, sort of doing the basics right, and from that I think they will get an uplift. What I would say, however, is the 16% return on capital employed target that they've got is premised around spot prices as of June this year. Now we know, and especially on the iron ore side, that prices is a lot higher than necessarily than many people are sort of seeing them, a couple of years out. Iron ore could be 30 to 40% higher than maybe what people see as long-term prices there. So one just got to understand there is a bit of higher prices also in that recovery.
Cobus, do you think that the demanding but achievable targets, as Mr. Kutafani puts it, is a relevant thing? I mean, you can say what you like. You can stand up in front of investors. It's the end of the year. You can say anything. Say, yes, we are turning this thing around by 2016, but the share price tells you something else, down 2.1%. What I need to know is details. Did they focus on one particular commodity, one particular geography, one particular region, one particular strategy? Did you get an idea of a real focus?
Yeah, so I guess in terms of, across the board, it was more from an open cast perspective, how they can get better efficiency out of their mining, i.e. do things in a cleverer way in terms of mine design, as I mentioned. I guess from a commodity perspective, the big items sort of came into discussion. A lot of time was spent on copper, where things are actually tougher, I think, than what they guided previously, lower production volumes there. And then obviously Minas Rio, which is on the iron ore side, which is a big headache for them, or has been a big headache, and I guess still is. But they're optimistic that they could potentially start with first production next year. And then again on platinum, the big Mogalakwena open cast PGM mine of theirs has certainly also received a lot of attention in the discussions. But I guess, to go back to your first question, is there enough confidence in the market? You got to say the market has received this, in my view, with a bit of skepticism. As I said, this 15% return on capital employed is still premised around pretty high relative commodity prices, especially on the iron ore side. And it will be tough, as he said. They got to deliver, and they work together.
Now, Izan, before you come in to ask Cobus a question, so I shouldn't go and leverage my access bond, put it all into Anglo American.
Yeah, look, I wouldn't go that far. It's still risky. I think the bottom line at this stage, resources shares is still risky in my view. We came out of a period where we've seen extremely good demand, beginning 2000s. We've seen our Chinese investment has gone up to almost 50% of their GDP currently from sort of 40% over that sort of a 10 to 13 year period. So, that is unwinding, and I guess one got to understand that from a starting point. And we've seen a lot of the miners has obviously responded with their supply. So we've seen supply responding, and demand is sort of,
so long and short, away. Too risky, is that?
Well, my question is, has there been a culture change since Mark came in, and what has that been, and is that complete?
Look, I mean, I would say he's certainly more focused. He's certainly more hands-on. You know, it certainly seems like he's involving a lot more skills into the operations. You know, you could hear that. You know, they think a lot more about how they can get more out of their assets. As I said, you know, they've got good infrastructure, and people is very important. And I think he's a people's person, and hopefully he can pull everyone together.
Clive, burning questions when it comes to Anglo American. Are you upping your access bond to go in?
I'll think about it. I'll consider it calculated risk, I suppose. But the one question I just wanted to find out is, you know, with all these troubles that they're having around in other countries, including Australia, and that, has he been able to convince the likes of, the investors with regards to the Australian story?
Look, he certainly spent a lot of time on relationship with certain stakeholders, you know, and I think he sort of highlighted that it's extremely important to spend enough time in building those relationships and maintaining them, you know, with the relevant parties in the different countries, obviously. As you know, as I always say, I think, you know, your mining resources is sort of sitting in that grey area, you know, it's something that the country would say belongs to us and you've got the right to mine it. And I think that, you know, for a miner, they always got to play between these two sides.
Cobus, if I knew what the leveraging and access bond meant, I'd probably join the discussion that Bronwyn introduced a moment ago. What I want to know is the following. BHP Billiton, Anglo American PLC, Glencore or African Rainbow Minerals, what is your diversified miner of choice, given what you've just heard from Mark Cutifani and the rest of the team there?
Yeah, I guess BHP Billiton still, you know, I think maybe from a top-down perspective where we're going in, where you've got a lot of supply and demand is showing some weakness, or there's some weakness in demand, potentially some weakness in demand. You know, I think BHP Billiton has been a player that's across its portfolio, sort of lower cost assets, and it's just a a safer play, if you want to call that, relative to the others.
But its share price has doubled.
Exactly, and for good reason. You know, you know, every year we stand before that, and it's almost like, you know, BHP Billiton looks like 10-15% more expensive than Anglo American, and come the end of the year when they deliver their earnings, then they're on par again. So the market was actually right in establishing that. Glencore, I mean, is the new kid on the block. It certainly is a potential, but I guess also it's a more riskier play. You know, it sits with higher cost assets, so assets that sit low on the margin curve, generally speaking, and it also sits with their trading business. You know, in tougher times, we've seen a lot of companies are focusing more to bring a lot of the commercial arrangements and sales arrangements in-house, and that can actually take business away from the likes of Glencore, you know, into the Anglo Americans, BHP Billitons of the world.
Cobus, I suppose if you're an optimist, you would say to yourself that Anglo American down 2.1% today, the resources index of the JSE just over 3% weaker. And talking about the Glencore motif, which we've just introduced, of course, a lot of people speculate might be jealously, or not jealously eyeing, but voraciously eyeing Anglo American. And as Anglo American becomes cheaper, they get more and more enthusiastic.
Yeah,
between the two go in their favour. Are they going to do it?
Look, it's a difficult one. I guess there's some poison pills in Anglo American for Glencore. It's, you know, as it currently stands, there's obviously some competition commission issues, and certainly some exposure which they've been very clear that they don't like. You know, so I guess maybe that theme has been overplayed. You know, would I bet a lot of money that there may be some corporate activity in the next year or two? I wouldn't. You know, at this stage of the game.
Izan, do you understand what I'm meaning when I say I'm going to dip into my access bond?
Yes, I do.
You do? Can I do just a quick survey around here? Lindsay's in the dark. Do you understand what I'm saying?
Well, in my personal, this is obviously purchase out. So that's what I would understand it to be.
All right. Well, it looks as though, Lindsay, everybody up here in Johannesburg is right with me in terms of the discussion.
I understand James Bond. Access bond is a new one on me. Thank you very much.
All right, so now Kumba Iron Ore, let's get an update on that front.
Yeah, look, I mean, you know, the share price will tell the story. You know, it's been hammered over the last couple of months. Certainly, you know, and it looks like at this stage, you know, the sort of the truth, what really happened, you know, over the years is coming out slowly. And I think they've just overmined their assets. They haven't done enough waste stripping in the times where they should have. And I guess, they argued, iron ore prices when they were trading at $180, $190 an ounce, that was the time to mine as much and get as much ore out as you can. But now they're sitting with the issues, and it means a lot more stripping, a lot more additional cost. Although they've given a relatively, I would almost say, positive or maybe clearing some uncertainty of what the market was really worried, or calm some of the fears we've had. I think the targets they look now towards the next couple of years is certainly lower than the numbers they sort of guided last year. So it is a step back. And I'm worried about Kumba. It's a company, I think, that has been gliding on the relative margin curve relative to its peers. If you take the top 5, Vale, Rio, BHP Billiton, Fortescue and Kumba, then certainly Kumba has been gliding on a relative basis. And I think that's going to continue in the years to come. The stripping ratio is picking up, and there is a lot more challenges for them in the pit.
Kumba Iron Ore, though, of course, is a company that produces iron ore, obviously, and iron ore imports into China have gone to all-time record highs almost on a monthly basis throughout 2013. We've been talking a lot about the diversified miners. Are the single commodity miners maybe going to come to the fore in 2013, or should we stick to the old policy of diversified portfolios and i.e. go for the ones we've just been speaking about? There must be one single commodity stock that you like.
Yeah, and again, it's almost company specific here. Iron ore, there is companies that's got more challenges than others, as I mentioned, maybe in Kumba's iron ore case. But I believe, ultimately a more diversified portfolio, generally speaking, should give you, a more protected balance sheet, if you want to call that. None of us know what's going to happen next year. I mean, this year, as you mentioned, steel demand from China has been extremely strong, has been growing more than 1 times its GDP multiple. Last year, it's been closer to 0.4 times. So certainly this year, this much stronger steel demand, driven primarily about the property sector in China, has helped a lot. The jury is out what's going to happen next year. We are expecting to see between 160 and 180 million tons of extra seaborne iron ore coming to the market next year, which is generally speaking lower cost iron ore that we're going to see. And in the wake of that, except if demand really surprises again on the upside, you may see that iron ore prices may dwell lower.
Clive, Izan, you can see a wealth of information when it comes to the resource environment. I know, Izan, we're going to be chatting about BHP Billiton when we talk about stock picks within your fold. Anything, gentlemen, before we let this man go, that you would like to get information on with regards to resources?
I mean, from my side, I'm worried that when you say that they've not changed anything with regard to the gap they've got with towards their PE ratio. So I want to understand, what do you think those challenges are that they're facing at the moment, Kumba?
You're talking about the strip ratio?
Yes.
Yes, yeah. Look, I mean, the challenges is exactly that they got to move a lot more waste for every ton of productive ore. And in the world where we live these days, we've got high diesel cost in general and high consumable cost. It is very expensive to do that. So I think that is going to be the challenge for them.
Yeah. Izan?
Well, with the Sishen South, would that change it at all?
Sishen South?
You mean the pit?
Sorry, yes, yeah.
Look, I mean, at the moment they are talking about, saving waste stripping, and I think that's what we got out of today's announcement, to try and strip the mine in a more optimal fashion, that you can actually be more productive in the amount of ore you move. So, as I said, generally speaking, there was some positive news on Kumba, but I think they're still battling with their current situation.